My portfolio is about $190,000, and it was generating $3,200 a month in passive income. Then the market dropped 9%. I'm going to show you every number, the losses, the income change, and exactly why I'm not selling. If one more person tells you passive income means you never lose money, they're lying. But losing money doesn't mean the strategy is broken. Let me show you everything. My portfolio breakdown. Index funds, 40% of total, down 11% this month. That's the big hit. Dividend stocks, 35%. Price down 6%, but dividend payments unchanged. More on that in a moment. Rights, 15%, down 8%. Energy, 10%, up 12%. The only green in my portfolio right now. Total portfolio value down about 7.2%. On paper, I've lost roughly $14,000 this month. Now, you might be wondering how $190,000 generates $3,200 a month. That's about a 20% annual yield, which sounds crazy high. Here's the breakdown. My dividend stocks average about 3.5% yield. My REITs pay 5 to 7%, and I hold some covered call ETFs like JBPI and QYLD that pay 8 to 10% by selling options premium. Blend it all together and you get roughly 20%. It's real, but it's not magic. The covered call portion sacrifices some upside growth for higher current income. That trade-off is a personal choice that depends on whether you need income now or growth later. Here's the part nobody talks about. My portfolio value dropped $14,000, but my monthly income went from $3,200 to $2,840, a drop of $360. Why? Because dividends don't stop just because stock prices drop. The companies I own are still paying. The righties are still distributing. The only income I actually lost was from one REIT that cut its distribution this month. This is the difference between building wealth through appreciation versus cash flow. When markets crash, appreciation disappears overnight. Cash flow usually keeps going. Not always, but usually. Which approach is right for you depends on your age and timeline. A 25-year-old building wealth makes a completely different choice than a 50-year-old needing income. Let me tell you what happened last time. March 2020. The market crashed 34% in 3 weeks. My portfolio dropped $42,000. I wrote in my journal that night, I can't do this anymore. This isn't passive, this is torture. I came this close to selling everything. My finger was on the button. I had the sell order ready for the next morning. But that night, I did one thing that saved me. I opened a spreadsheet and calculated. If I sell now, I lock in a $42,000 loss, and I stop receiving $2,400 a month in dividends. So the real question isn't, am I losing money? It's, is the income still coming? The income was still coming. Not all of it. 2 companies had cut dividends. But 85% of my monthly cash flow was intact. The companies were still profitable. They were still paying. So I didn't sell. I closed the laptop. I went to bed. Worst sleep of my life. 12 months later, by March 2021, my portfolio had not only recovered, it was $18,000 above where it was before the crash. And my monthly dividend income had grown from $2,400 to $2,800 because I used some of the crash to buy more shares at lower prices. If I had sold that night, I would have locked in a $42,000 loss, killed my income stream, and missed the recovery. The cost of panicking wasn't $42,000. It would have been over $60,000 in lost recovery plus lost dividends. This is why financial plans need to survive your worst night, not your best day. Back to now. Down $14,000 on paper, but 89% of my monthly income is intact. The companies are still profitable, still paying dividends. The only cut was one REIT. And honestly, I've been thinking about replacing it anyway. Am I worried? A little. Oil above 110 and inflation at 4.2% create real risks. Some of my companies might cut dividends if this lasts another 6 months. That's a real possibility I'm watching. But am I selling? No, because I asked the same question as 2020, is the income still coming? And the answer right now is yes. Whether holding through a downturn is right for you depends entirely on your income needs, your timeline, and your emotional tolerance. Some people can't sleep with a $14,000 paper loss. That's okay. There's no shame in reducing exposure to sleep better. The right portfolio is the one you can hold through your worst night. If you know someone who's staring at their portfolio right now, someone thinking about selling everything and going to cash, send them this. Not to tell them what to do, but to show them they're not alone and that there might be another way to think about it. Subscribe. Every month I open my real portfolio, real numbers, real losses, real dividends. No filters, no fake screenshots. If it goes down, you'll see it go down. If it recovers, you'll see that too.